I made over $11,000 profit trading gold in one single day. And in this video today, I'm gonna break down the trading strategy that I used to make over $11,000 profit on gold in just one single day. But just before we do that, if you're new to the channel, consider hitting the subscribe button and turn on the notification bell. So that was the trade that I did. I risked around $5,000 on this trade and I made pretty much $11,287 from this trade exactly. And this trade gave me 2.12 rewards. Now, why I took the trade from this price level? What were the confluences that I got that made me decide that I'm going to take a buy position, even though when on the 15-minute time frame from where I took the trade, the trend was going for the downside. Let's deep dive into that. The first step that I want you to do is go to daily time frame and always start from the daily time frame, no matter whichever pair you want to trade on. I took the trade on gold, so I started my analysis on the daily time frame. On the daily time frame, what you see that overall trend of the market is going for the upside. Yes, on the 15-minute time frame, it was for the downside, but on the daily time frame, which is our higher time frame, we are making a higher high and higher low sequence. Now, in this higher high and higher low sequence, our job as a trader is to always wait for the market to give us a trade opportunity that meets our trading criteria, the set of views that we have in our trading plan. So when market was making a higher high, high low sequence, right after the recent market structure, when buyers went up and they made the highest price on gold ever, sellers made a movement. It was a pullback from the market. So just before the high low was created, I entered into the buy position. What were the confluences that I got which made me believe that we are not gonna go to upside again? Let's talk about that. Now, on this chart on the daily time frame, that is the market structure. Market is making a higher high, high low sequence. That was the higher high, then made a high low. Then we went up and created a high low. Now, every time a market is pulling back, you will notice a pattern that the recent market structure, that market is breaking every time, pullback is coming to that level. Just like the way buyers broke this strong resistance level, and when they broke it, sellers came down to retest that level before buyers continued their movement to the upside. So when buyers continued their movement to the upside, there was this market structure which buyers broke. This strong resistance level from where we got a pullback before buyers made a movement and ended up breaking this level. Now, when sellers made a pullback, during that pullback, look till where they came. They came to this exact price level, this exact break of market structure. They retested this level, made a support, and buyers continued their movement to the upside. Now, whenever there is a market structure, I wait. After, in the example of buy, when sellers are going to make a pullback, I wait for them to come to the break of market structure, which was the resistance. And just like the way they came here. Now, right after it happens, I know, yes, my analysis on the daily time frame is done. We are in the higher high, high low sequence. We are breaking the previous market structure. Sellers are making a pullback and they are coming to test the recent break of market structure. So what's the next step? My next step is to go down to 4-hour time frame. Now, on the 4-hour time frame, I just analyzed the market structure of the pullback. And here we can definitely see that's the market structure when buyers broke this strong resistance and went up and sellers started to come down. I was waiting for them to come to this exact price level, so that way I can then look for the buy opportunities. Now, when the sellers came down, look how strong they came down. Initially, they were very, very strong. Now, when they're coming down, that was the movement that happened from the sellers. Buyers came up, then sellers tried to come down again, failed. Buyers tried to go up. They could not go up because sellers, they have a lot of strength in the movements during the pullback. And right after the sellers movement, we reached exactly at the key structure level which got broken last time. However, there was no rejection. It was just a miniature rejection. Then sellers made a movement to the down. Right after that, look what happened. We got a couple of rejections here. Below the level from where I was initially expecting from the market to make rejections, below that level, we got the rejections. Now, right after we got the rejections, what's the next thing we want to do? We want to go down to the 15-minute time frame, because I always recommend whenever you are trading gold especially, never really go to 1 hour or 4 hour or even daily time frame to execute your trade. You can do your analysis on the daily time frame and you should do your analysis on the 4-hour time frame and on the 1-hour time frame as well. So that way you can have an idea that what the higher time frames are doing. Top-down analysis starting from daily time frame, coming down to 4 hour, coming down to 1 hour, and then going to the time frame frame where you want to execute your trade, put your stop losses and put your take profit. Now if we just go down to the 15-minute time frame, on the 15-minute time frame market, when I got interested in taking the buy, it was like this. Now at this time, yes, we definitely know that on the 15-minute time frame there is a seller's trend, and the last big movement happened, it was from the sellers when they broke this key level of support, which I'm going to show you. They broke this key level of support and went down. Now that was the area which was very interesting, because on the 15-minute time frame from where I want to execute the trade, break of market structure happened right there. Now it's kind of an illusion. On the daily time frame we are on the high high and high low sequence, while on the 15-minute time frame from where we need to execute the trade, we are in the lower low and lower high sequence. And that's exactly what we need. We need market to make an illusion, so that way the retail traders, they start to think, oh right, yeah, we are in the seller's territory, we are in the seller's market, so we should not be looking to take the buy. But on the other hand, the higher time frame, the bigger boys, they are interested in taking the buy, and we want to trade with the big boys. So right after we got the rejection, which was on the 4-hour time frame, that was the market structure. So I got very interested, because I knew we are just lower than the key level from the daily time frame, which was break of resistance when buyers went up, broke the previous resistance and created a higher high. Right after I got this rejection, I need a confirmation. How will I know that yes, market is gonna go up? I need a confirmation. So for that I use two indicators. One is MACD and the other one is simple moving average. And the concepts of both the indicators are very simple, and you're gonna love when I'm gonna explain to you. So to add the indicators, just go to indicator section and type here MACD. I have already marked MACD as my favorite, moving average, convergence, divergence. Add that and then type moving average and choose this one from the list, moving average simple. Once you do that, it's gonna look like this. So what we're gonna do, we're gonna change the settings of the SMA, simple moving average, and in the inputs we're gonna change the length from 9 to 20. Now how we're gonna use both of these indicators is that on the chart of gold, what you see buyers making a break of market structure. That means they are making lower low and lower high sequence. That's the lower low, that's the lower high. And when sellers broke this structure, the next lower low, it happened right here. So we are definitely making lower low and lower high sequence. Now when we are making lower low and lower high sequence, at the same time, that's the lower high, the previous lower high and the new lower high, and that's the lower low. I'm going to remove this one. I'm going to remove this line as well. Now what you see on the MACD, that yes, when sellers movement happened which broke the key level of support on the 15-minute time frame, on the MACD it also made a lower low. But right after that, buyers went up on the 15-minute time frame on the chart, and sellers started to go down again, and they ended up creating a new lower low. However, on the other hand, on MACD, what you see that there was no lower low. Instead, market made a divergence and it created a higher low. Now on the charts, market is making lower low and lower high sequence, but on the MACD there is a divergence. Instead of a lower low and lower high sequence, MACD showed us that there is a higher low sequence. So that means there is a divergence. That's my first confirmation. Right after this rejection happened on the 15-minute time frame, which we see here on the MACD indicator, look what we are doing. We are making higher high, high low sequence. So right after that, I got very interested, because I knew yes, there is a divergence. When market isn't creating lower low anymore, on MACD we are making high low, and when market even was making a lower low on the charts, MACD was showing higher low sequence. So that means there is a divergence, and that's what we needed. So what I did right after that, when I saw the divergence, we can simply just right now get rid of MACD because we're not going to use it right now, and on the charts we're going to use simple moving average. And on the simple moving average right now we are going below it. You can see the movement that has been happening. Market is staying lower than the 20 simple moving average, but we need market to basically break the moving average to the upside and starts to stay above, while we have divergence shown on MACD and we have got the rejection from the lower low sequence. So we have our rejection, so we're gonna wait until market comes back higher than the 20 SMA. Now one very good thing that happened right here is that before market went up higher than 20 SMA, look what we did. We took out the liquidity at here. This was the lower low. Market just went went down and it looked like that it's breaking a structure to go down. So whoever was taking a sell position from here by thinking that we have started to now break a new structure and we're going to create a lower low, look what market did to that trader. They liquidated the positions of all the sells that got placed here, and right after that we also came above the 20 SMA. I ended up taking the position, and when I took the position I put my stops lower than the rejections, and my target was near to the area from where this break of key support level happened. On the 15-minute time frame, this was the strong support level which kept holding the market for quite some time. When they broke it, it went down, and my target was right here with like 2.2 risk to reward ratio trade. So I'm going to show you how my trade got hit take profit. It first came down before it went up, and there was this news event which made this strong movement to the upside, and look, after that market even went way higher than that, because now daily time frame is playing its movement. So when daily time frame is playing its movement, it makes a big movement on gold. So that was the breakdown of the trading strategy that I used to trade on gold that made me over $11,000. Let me know in the comment section if you have got any value out of this video and what do you think about this trading strategy, and what is your trading strategy. You can also let me know in the comment section as well. So that's it from this video, guys. Thank you so much for watching. If you haven't subscribed yet, make sure that you are a subscriber, because I am sharing my trading strategies that I use on daily basis every single day. So it would be a great help if you can subscribe to the channel and turn on the notification bell. Thank you so much for watching until the end. I will see you in the next video. Bye for now.